So you have a portfolio of money and you want to invest it in currently. Equities are a no-no. Everybody says, hey, they are too risky. So you want to park it in a fixed income product. You are probably thinking of a fixed deposit, but the rates aren't quite matching there. And everybody's telling you, hey, RBI is going to hike rates. So what do you do in a scenario like this? Well, let's try and figure out what are the options for you as an investor if you want fixed income. Two experts who do this for a living day in and day out, Kartik, Jhaveri, Vishal, Doshi, join in to talk about this. Thanks so much, gentlemen. Kartik, I'd like to start with you. I'm splitting this into three buckets. There are investors out there who want to park their money for about a year or maybe a year and a half. So between 12 to 18 months. They were looking at a fixed income product and somebody tweeted that, hey, there are these other bonds which are available, which give you 6.43% interest. And that's much better than the fixed deposits. Is that the best option from a 12 to 18 month perspective?
So from a 12 to 18 month perspective, the best in my view right now, which I'm recommending, is what is known as a peer-to-peer lending investment. The rate of interests are ranging between 9 to 12% there. It is taxable like any other bond. And the way the risk management happens, the way the control is, once you study a little bit about it, then you feel much more confident about this as a business model. About 5 years so far, RBI licensed platform. So I think this is a great thing for investors to do between 1 to 1.5 years. Typically, these platforms take money from 1 year to 2 years. So you can expect a rate of around 10 to 12% for 1 year or 2 year period.
How safe is this, Kartik?
So it works as a structure. It's very similar to that of a mutual fund. There's a manager, and then there is an escrow or a trust, which is equivalent of a mutual fund. And then there is a custodian or a trustee. The risk management happens by the way the money is distributed and divided across thousands of people who are borrowing the money. And this is actually going out to all the people across the length and breadth of the country. So loans that, if I invest a lakh of rupees, that might be split into 200 or 500 borrowers all across the country. So that way, my risk per borrower is lesser. And a company has lots of schemes like a mutual fund. And I think it's a very, very promising sort of option. In America, it's very popular to do this thing. It's about 5-7 years in India. Maybe 5 years down the line, we'll be talking about, which P2P scheme to get into. That's the way we talk about mutual funds. So I think it's a very powerful area.
That's a great insight. Any platforms, very quickly, any platforms that you can think at the top of your head which do this?
Yes, of course. There is liquid loans, which give about 8%, no lock-in, no time period available approximately. Then there is Transcend, there is Lending. Lending has some very interesting schemes where you take the NPA risk on your account, and then the returns can be even higher than 12%, 12 or 15%. See, they don't have a fixed cost like a bank. So they take their margin and they pass on a lot of the returns of the lending to you. So which is why it's a great option.
Great. Kartik, thanks for that. Vishal, to you as well. What's your opinion?
Niraj, there are a couple of options. One, as Kartik rightly said, for a slightly riskier option, I think P2P loans is one, where liquid loans particularly is one form which I personally like. It is not exactly P2P in that sense, where we are not giving money to a particular individual or so, but the individual is borrowing for some particular activity, assuming the individual takes a course in say upgrade, or he wants to go for an IVF or something, or maybe a hair treatment or something. So something which he himself has decided to take that up. So when he goes to such an institution, normally they get finance options. So typically what liquid loans does is they actually fund this kind of activity. And the investor gets his share of around 8-9%, or in some cases even 10%, depending on what is the holding period.
Liquid loans is a platform, is it, Vishal?
Yes, it is a platform. Now CRISIL rated as well. Perhaps the only such platform to have a CRISIL rating.
Okay, great. Okay, what other options?
That is one option. So another, the traditional safe option being corporate fixed deposits, which are yielding around 6% odd for a 12 to 18 month period. So I think these are the two options which are available for a very shorter time frame investor.
Okay, for somebody, Vishal, who's got a 3-year time horizon, 3 years and slightly higher than that, fixed income again, what are the best options according to you?
Then I would suggest to go for MLD because of the taxation.
And MLD is a market-linked debenture.
Absolutely, and MLD is
what does an MLD do?
MLD is basically having a fixed income as an underlying, fixed income MLD. And what it does is it will have issued by say an Edelweiss or say some other institution, and the tenure is typically 3.5 years. It is the reason why it is called market linked debenture is there is some condition attached to it, but usually the condition is such that it may not get hit. So in the event the condition is not materializing, then the investor ends up making 9.5% with a capital gain taxation. So post-tax, this kind of structures give far better returns compared to any other traditional fixed income avenue that is available.
Okay, Vishal, just one quick follow-up. This is from a perspective of somebody who's putting money into fixed deposit. So it's the very, very safe part of the investment. You would suggest that these MLDs are as safe or almost as safe?
See, in a fixed, it is a misnomer that a fixed deposit is safe, right? I mean, we all have seen what has happened to fixed deposits. So let us not get into the safety part. So, but yes, we can always look at the rating of the MLD issuer and then decide whether it suits the investor or not. The other option being directly buying NCDs or bonds of AAA rated institutions.
Okay, and what the returns would be there, Vishal, very quickly?
That would be around 7.25 types. So
this is
yes, with the complete full taxation.
Okay, great. Where can one buy these MLDs, the market-linked debentures that you spoke about?
These are issued by institutions, so they have to be bought from them. I mean, they are not readily available per se.
How does an individual investor reach out to the institutions, Vishal?
No, they will have to go through the advisors. I think that is the best.
Okay, fair call. For you, the same question.
Yeah, so I have only an issue with lock-in kind of a thing, because when you said that fixed deposit is like a safe investment, you can walk to the bank anytime, pull it out, right? So I would like to look at similar products which give me the flexibility of liquidity when I want it. So from that point of view, I will go to a mutual fund. I mean, MLD is a good idea, but I like to recommend again corporate deposits, 36 months or something like that with the premature withdrawal facility. Or something like a medium duration fund, even that's not a bad idea sometimes. Corporate deposit, because if something goes wrong even with a corporate deposit, a corporate fund or a medium duration fund, if one part of the portfolio gets segregated and different, you still can withdraw the fund. You can have access to your fund. So you get a slightly better return than your fixed deposit, but you have liquidity. So I would rate liquidity as very, very important from a medium-term time frame. And for that matter, long-term also. I won't like to pull out anytime. So I like these products.
And what are the returns that one would get? I believe if you invest in more than 3 years, you also get the benefit of indexation.
Yes, of course, you'll get indexation, but the returns will still be in the 6 to 7%.
6 to 7%. Okay. And last question, northwards of 5 years, Kartik, to you, northwards of 5 years, instead of a fixed deposit, what is a better option?
I actually sometimes would like to recommend traditional insurance products, which have a guaranteed element to it. And that those guaranteed elements play out at about 6.5%. And then they go on for not 5 years, but probably as much as 20 years and 25 years. So you have two advantages there. The liquidity is not such a great thing in that space. But once you get into such products, you get your 6%, 6 quarters. Sometimes the bonus interest rates perform in such a way that your bonuses are better. Fund managers done a good job. It could even move to 7 quarter. But everything is tax-free. So that's the huge advantage. You see, you're not paying taxes. So if you're wanting to lock money into a fixed income product for a long time, go traditional insurance. That might be a good idea. And if you're a pensioner, senior citizen, maybe you want to lock in an annuity plan. There are plans these days, Niraj, which give you the exit facility. Earlier days, you see what used to happen? We had products, but these products did not give us an exit route. So you were locked in for like many, many years together, even before you could pull out the surrender value out of the policy. But today it's much better. It's much, it's far improved. The product designs have upgraded. So you have these facilities to exit also, and not with making too much of a loss or something like that. So you get your money, plus you can exit. So that's why long term, I would go to policies which are tax-free.
Gentlemen, thank you so much for joining us for this quick conversation. I hope it gives our viewers some insights into where they can park their money to get that slightly better return than a fixed deposit. Viewers, I would urge you to try and read up on the risk parameters of all the options discussed here, because as we said, we are asking this from a perspective of an alternative to fixed deposits, and some of these could be as safe, but please do your own research before you think of investing into any of these. Kartik, Vishal, thank you so much for joining in. Viewers, thanks for tuning in.
Pleasure, Niraj.
Pleasure, Niraj. Thank you.